Good morning. We're here to study China, CHINA. And let's start by the charts. This is the long-term chart going back to 99. The stock had its own bubble here and its own collapse until 2001 or so. Then this big bull run here in 2003, it was really big on a percentage basis. Then it came off to about $2-3 again, and now at 8.9 or so. Let's check the short-term chart. You can see that there's this important support, there's ascending trend line, and China just touched it. It's really important the stock is able to bounce from these levels. The 200 days moving average is still coming up here at about 7. So there's plenty of support. The long-term trend is still bullish, but this gap here was really nasty, and well, it would be bad if the stock were to break this ascending trend line on a technical basis. Technical overview: China is now flirting with its long-term ascending trend line. It shouldn't break it on the downside to remain bullish. Fundamental analysis: this is the share count since 2000 and the market cap. Well, there wasn't much dilution here, just a bit here in 2004, and now the company has about 1 billion market cap. The market cap has been rising at about 12% a year average. Okay, moving on. This is the balance sheet. There's no long-term debt, but the current ratio is deteriorating here, and it is just 1.5 now. I like to see it above 2, so the balance sheet is a bit weak here. These are the revenues. For 06 we have just guidance, and for 07 we have this midpoint guidance of 418 million. Well, revenues have been growing strongly since 2002 at a 48% average annual pace. The industry grew just to 13% from 2005. And the gross margin for China is 54%, for the industry average is 57%. Price to sales ratio is a bit lower for China than for the industry average. So just looking at this, China looks cheap here. Let's move on. As for earnings per share and net margin, there's a lot of controversy around this because the company has been giving guidance, but not with GAAP numbers, So it looks on the news, it looks better than what it is. I see 15 cents earnings per share for 06 and 26 cents for 07, and this means about 7% net profit margin. Price to earnings ratio forward is 34 and the industry average is 38, so just a bit cheaper than the average here. As fundamental overview, the company's guidance is misleading because net income on a GAAP basis is about half of what they've been releasing as their guidance. Revenues are growing nicely but losing momentum. Not sure what to think of so many press releases. I fear dilution since the balance sheet is quite weak now. So I'm always suspicious when companies start putting out press releases almost every day and raising guidance a lot, but we don't know about earnings per share. And they can have net income very high but earnings per share low because the share count is rising, because they're diluting shareholders' value. So I'm suspicious on China. Let me see the long-term estimates that I have. This is a bit of the best case scenario. I consider China will grow revenues at 20% average annual rate for the next 10 years. A net profit margin will be 7.5%. This means that in 2017, given these assumptions, China will have revenues of 1.9 billion and net income of 143 million. Apply an average 16 times earnings multiple and get a market cap of 2.29 billion. This means the estimated share price average annual increase will be 8.64%. Well, this without any dilution, because if there's dilution it will be less than 8.6%. So I like to see that above 16%. We're getting here 8% on a best case scenario. So my rating is really average. 5. This is on a 1 to 10 scale. Thank you. Good luck. Bye.